There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome to the Zeus Weekly Insights call. Want to go over a few things, a few fundamentals, kind of break down a little bit of the stuff that I've been going through this week as far as kind of adjusting risk management, some breakout areas, some psychology stuff, some trials and tribulations, I guess, as going through figuring out what kind of trader you are. So a couple things that I want to go through, some personal development stuff, practices that you guys can practice that help me quite a bit as far as just diving into just trading as a whole. There's a quote that I really like. I read it every day. A trader that masters patience masters everything else. That's really what trading is. It's all about psychology and patience. 90% psychology. I'd say 80% psychology, maybe 20% actual strategy and fundamentals. So, when it comes down to it, price action is king. I think Zeus does a really good job at mapping out trend and price action as a whole. So, for me, I really like trading on the lower time frames just because everything happens first in the lower time frames. Trends more established in the higher time frames, but you can really see what's going on and then just cross-reference every time frame. If you can see what's going on and follow price action on the lower time frame, you can definitely do on the higher ones. So, a practice that really helps me, and I wouldn't say it's airy-fairy, but breath work. And I'm not always the best at it. I'll wake up and I have my practices that I do. I sit and meditate, and but it doesn't have to be this, going really deep. It's just about calming your central nervous system. And so I kind of want to build on this throughout our weekly insight calls, so it's called polyvagal breathing. So you breathe out for twice as long as you breathe in. It's like in for 3, out for 6. And what it does is it just calms I think it calms your vagus nerve. It calms your central nervous system. And so basically what that's doing is it's telling your body and your mind to calm down. And trading can be really stressful, especially when you're first starting out, when you're learning. It can be a bit of a mind melt. So when you really, understand price action, you start to understand the strategy and really just following the arrows and remembering and compounding those rules. Then it comes into the psychological stuff. Once you've compounded that and just really focusing on your breath, it sounds a little airy-fairy even when I say it, but it really works. And whether you're going to the gym and listening to music or reading or meditating or swimming or whatever, what that does is it brings you into that, it just centers you into that moment, right? And same thing with trading. It's a practice. It's over time you compound something, whether you're going to university or athletic or learning to read or do math or whatever it is. Trading falls under it's the same umbrella, right? So how do you become better at those other things? You integrate outside practices that will help narrow that in. So practicing, it's kind of there's a yoga concept too, that your practices on your mat, they relay or they correlate to what's going on in your regular life. So the way that you conduct yourself in your regular life is most likely the way you trade as well. And I mean, that's relative, but if you can be calm in a somewhat of a stressful situation outside of your regular habits, you can bring that onto into your workplace, onto the mat for yoga, into the gym, into your trading account. So when you really start to kind of compound this entirety of your mental state, it really does make a big difference for your trading. So so the few things we talked about this last week, I'm gonna just kind of continue to touch on them every week. It might seem redundant, but repetition is how you compound information, right? So big thing a lot of traders struggle with: greed, attachment, frustration, chasing trades, not cutting losses soon enough, not moving into the next setup, not letting the trades run as much as they could be. And I'll go in and show you guys the fundamentals of kind of how I do that, and being able to find the humor in the losses. It just means your stop loss works. That's at the end of the day. Myself as well. I remember when I first started out, I would lose and then I would chase the trade and then I would over leverage because I had to, get this much more to make up for this loss because I let that trade run way too long, and then you're blowing accounts and it's not fun. That was my experience, at least. The amount of accounts that I blew when I first started is insane. So we really built Zeus to be this full picture so that people weren't blowing accounts. Proper risk management, proper risk to reward. It's really like I said, the umbrella of Zeus. Find the play. When you're not attached to something, when you're playing and you're experimenting, you're having fun, there is no really emotional attachment to it. Even your wins, that's a big thing for me, is like getting out of being humble when you win, right? Because it's really easy to let your ego, let your mind take over, and then in the exact same thing, it's equally as easy to beat yourself up when you lose. Sometimes the arrows are wrong. Sometimes you're wrong. Sometimes you make a mistake. Sometimes you're right, over and over and over and over and over again. And it builds up your confidence almost too much, right? So letting go of the attachment of your losses, huge. And then that next step is letting go of the attachment of your wins. That's even bigger, if not equally as important. And so very, very interesting fundamental, because you would think that, there's this almost like this trigger in your mind that's, I've done something, I've accomplished something, I deserve to reward myself, whatever that looks like, whether it's a mental or you actually physically reward yourself by doing whatever it is that you might do, go out for dinner or whatever. So internally, okay, cool, just won the trade, next setup, or walk away. Depends on the way that you're trading. If you're, how do I say this? Usually what I do is I give myself a window, not so much, I'm going to make 2% and walk away. I'm going to trade for 3 hours and I'm only trading for 3 hours. And at the end of that 3 hours, if I'm in profit, then I'll walk away. And if I'm in losses, if I've lost, then I'll walk away. Versus, I don't want to pigeonhole myself. I make 1% walk away. When I could have, stayed there for an extra hour because that's my allotted time and, pulled 5, 8, 10. It can get dangerous because you're in there for 3 hours, and you've made 2% and you trade for another 1 or 2 hours and then you've lost 5% or whatever those numbers are. So you got to find your risk parameters on how you play, so to speak. So for me, this is a huge thing. It's really not about the money. That's not why I trade. I think it's an excellent idea to diversify. Obviously passive income, residual income, multiple streams. That's how, the rich stay rich. But for me, trading, I like trading. I love building robots. I love messing around with logic and working with our devs. It's fun for me. I really bring the play in developing this. It is a different story for me. But I used to spend like 15 hours a day in front of the screen. Like my eyes would just be like they feel like they were bleeding because they were so dried out from looking at the computer. And at first it wasn't play. It didn't seem like play. It felt like work. It was, but it's moved into this. It's a different concept now. So it's not so much about the money for me. I've learned so much about myself when it comes to trading. It's that element of self-realization. So you have to, you don't have to, but when you make trading about something way bigger than the money, it makes a big difference. Because when you win, it doesn't matter. When you lose, it doesn't matter. Because you're risking capital that you're willing to see go to zero. Now, proper risk management, that should never happen. Things happen. It's just the nature of learning. It's the nature of the markets, right? So, for me, the spiritual side of trading really, really intertwines with the entirety. It's not one or the other. It's both. And becoming more self-realized. I've learned so much about my patience, so much about my mental state as far as that more. Some people do it with food, some people do it with gambling or with substances. Some people do it with trading. It's taught me a lot about myself, and just kind of stepping back and being the observer and going, holy crow, what's going on in this moment, right? And that is applied to the way that I communicate with my family, my girlfriend, everything, the way that I communicate with myself. So it really is this personal development journey that a lot of people don't realize, even years of trading. And a lot of people don't talk about this. So I find it fascinating. It's really cool. The psychology, not only the psychology, but like the esoteric stuff that goes in behind trading. Really interesting stuff. So you don't have to, but I think it'd be a good idea to find what is trading to you. What kind of trader are you? I'm a scalper. I don't want to be sitting in front. I mean, be sitting in front of the screen for 3, 4, 5 hours, 6 hours, 9 hours if I'm working. But I'm not looking at 30-minute charts, 30-minute candles, 1 hour, 4 hour. It's boring for me. So I've made it fun. I watch the 1 minute, 5 minute, maybe go up to the 15 every once in a while. So I've had some good conversations with people that they almost were beating themselves up. They're like, I'm not a good trader. I got to step up. I'll blow whatever. And that's one simple question. Like, well, what kind of trader do you want to be? Do you want to trade on the 1 hour? Do you want to sit in the front of the screen for 4 hours waiting for one trade? Do you want to walk away from the screen and have trades open? And he just had to sit down and figure out like, oh shit, I want to be a scalper. I want to, sit, catch 10, 20, 30 pips and not have any trades when I'm done trading. I'm done trading for the day. I want to walk away and have no open trades. So those are questions that you ask yourself, right? So and I have a notebook. I've got affirmations that I read every day. So it's just like, I don't know, building this whole entire system into a system. It's not just, you wake up, you go to a job or you go to school or whatever it is. There's a protocol. So finding a protocol to make sure that you're sitting and you're focused and you're fully present, right? It's a mental game. So it's this week I said I was going to take the whole week off. That lasted until Tuesday. So I didn't really trade this week. I was testing some new logic out. We've got some really cool advancements coming your guys' way. I won't dive into that too much, but we've got 2 more reversal logics that I'm integrating. And so I'm working with one of the devs this week and we're going to get all that stuff rolled out. So I didn't do a whole lot of trading. We'll go over some price action stuff for gold, what it did, highs and lows. First, what I'm going to do, let's see. So first, I'll go ahead and share my screen on OBS. Where are we here? There we go. I'm just going to go ahead and share my screen on Zoom as well. Okay, so you guys should be able to see my screen on both platforms. So this, for me, last week, what we did is we went over pound AUD, US 30, SPX, and gold. So it's funny. I'm glad that I went through that because I figured out some really awesome parameters for you guys because I know that not everybody wants to just focus on one thing at a time. I've gone back to my old habits. I'm just focusing on gold. It's, as far as structure and learning, a lot of people say, focus on Forex first, then go indices, then go gold, then go crypto. I did it backwards. I'll focus on gold right away. I really like it. And so usually what I'm doing is I've got the 1 minute and the 5 minute open. Like I said, we're messing around with some logic, but if the 1 minute misses an entry, there's like a big meltdown or there's a big run up, most of the time it catches it on the 5 minute. It gives you a better idea as far as price action, liquidity zones. You can, like if you're going through Keenan's training, you can mark up order blocks, or if you're using Arrow, great product to figure out order blocks and what the banks are doing. So it gives you kind of a whole picture. I don't usually go higher than the 5 minute, but what I have been doing lately is I lowered my lot size so I can have more than one position open at a time. And so if you go to the, I don't think it's on AP yet, but in the traders chat, it gives you a markup of all of the settings. This is very, very different than what I have in there. 20 pip stop loss, TP1 is 20, TP2 is 40, and I'm only taking a portion, like a very smallest portion I can at break even. What's happening is as soon as stop loss is set at break even, it's not actually break even, it's like 2 pips in profit. So even if it does pull back and hit that 2 pip in profit, I want to have as much of the lot open as humanly possible. Sorry guys, 1 sec. just need to, sorry, I gotta mute. Oh, there we go. Yeah, so I want to try to ride these trades for as long as possible. And the one pitfall of this is when you get those huge price spikes, it kind of messes with you a little bit. But let me see. So for this run up here, we're integrating that trailing stop loss, right? So you caught 30 pips out of this. My stop loss would have been right here. So I probably would have caught almost 10 pips out of it. So it is kind of frustrating because, you know, you could have had 30 pips out of this and got out. You can also recognize when price is overbought and when price is oversold. So like this, for instance, these arrows down, you know, you could have caught 50 pips out of it. You can see that price is oversold right here, but then it also melted down for another 50 pips. So I'm constantly moving my my stop loss with the tether. So out of this entire move, you would have caught 50 pips. So there are situations where you know, it goes 10 pips and pulls back, reverses, and you lose. There's times that it goes 20 pips, pulls back, reverses, and you lose, and maybe you only catch 5-10 pips out of it. And then there are those big, absolute, insane meltdowns or runs up where you catch the whole entire move. I think this is a good example. Like this, for instance, you would have caught, you know, 40 pips out of this, right? So a 40 pip take profit with, I probably would have had it 20 pip stop loss. You got a 2-to-1 risk to reward, right? So I'm trying to take as little as possible at TP1, as little as possible at TP2, and take the entire bag as far away as possible. Now, another way to run this would be this, like this. And then you're trying to catch that full 40 pip run. Because if you've got a 20 pip stop loss every single time, and you can catch 40 pips, 40 pips, 40 pips, you've got a 2-to-1 risk to reward every single time. You're breaking even as soon as possible. You hit 20 pips, now you've locked in 10 pips, because when you hit TP1, set stop loss to break even, TP2, it sets stop loss to TP1, and then obviously final TP takes everything. So you've got almost immediately risk-free trade at 20 pips. You've locked in a 1 to 2 risk to reward, and anything higher than that, you're at least 1-to-1, if not 2-to-1. So different ways to kind of mess around with the parameters. The presets in the traders chat, those are probably the best as far as beginner, middle, or beginner, intermediate, and advanced. You can kind of take all of those and move the bits and pieces of what works for you. Another way to do this would be take 10% at each. Another way to do it would be take most of the bag at 20 pips, then you've got at least a 1-to-1 risk to reward. So kind of leave it up to you guys to use the beginner, intermediate, and advanced fundamentals and kind of play with them and make them your own. Because some of you guys might want to take, if you're right 80% of the time, I think a good goal, if you have a 1 to 2 risk reward, meaning you're risking 20 pips to make 10 pips, so you're risking $2 to make $1. If you're right, if you're doing that, I would aim to be right 75-80% of the time, because then you're profitable. And then you're profitable more than you're not, right? So I think that's a good goal. If you've got 2-to-1 risk reward, as in you're risking 20 pips to make 40 pips, you can be right a lot less often. And so it's just kind of trying to figure out how much time you want to spend in front of the charts and what kind of risk reward do you want to have, right? And so I was playing around with 5 pip break even, but it takes making it like this, and then 10 and then 40. But I find that 20 pips, if you're trying to catch, a lot of the time it'll go 10 pips, pull back, break even, and then go on the runs. A lot of the time it'll go 10 pips and then reverse. But the times that it goes 20 pips, generally speaking, if it goes 20, it's going 40, 30. So, I find that a great TP1 is 20 pips. Unless you're doing those scalps, like 7 pips, and you're boom, boom, in and out of the market over and over again. If you're doing 5 pips, I would just take almost the entire bag at 5 pips. There's no reason to set it to break even. That's just kind of something that I've been playing around with. What I want to do is, let's see here. So I think this is a really good practice for you guys to go through. Not necessary, but Zeus marks up support and resistance. Oh, I can't go back any farther because my bar is calculated. So, it allows you guys to not have to do that. But recognizing support and resistance on your own is really, really important. So basically, you're just looking for floors and ceilings. So you can see that, and it doesn't have to be perfect. At one point in time, the ceiling was here. So mark this up. There's a ceiling up here. There's a ceiling right around here. And like I said, it doesn't have to be perfect. There's boom, 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 boom. Let's go around here. Not perfect. Now let's look for floors. And there's another good one. And this was my hardest thing as a new trader, is trying to figure out support and resistance and structure. I remember I was learning and I was like, what are you talking about? Last points of structure. And you can use moving averages as last points of structure as well, right? So go down from the week, go down to the daily. It all goes hand in hand, and then you can make smaller ones. Oh, there's one here. Boom. Roughly, generally speaking. Let's see. There's another floor right around here. And then go down to the 4 hour. And I don't use these time frames to trade, but it's good to recognize and go, okay, highs and lows. Where are the highs and lows in the market? And honestly, it's like a game. Like I said, make it play, right? Oh, there you go. Sure, let's go here. This is not difficult. It's just repetition. Let's go to the 30-minute. There we go. Let's go to the 15. There's the high right here. There's another high here-ish. Let's go down to the 5. Go low, low. And just because there's highs doesn't mean it won't break up, and just because there's lows doesn't mean it won't break down. And just track all the way down. See how far we are. There's a little bit of structure here, not much. Let's see. Oh, whoopsie. Sure. I bet you that was probably a liquidity zone. Keena would know better than I do. There you go. Now we'll go all the way back up. Weak. Oh, geez Louise. There we go. See, so how big of a difference it makes when you go all the way from the week, marking up those highs and lows, and all of these, you can see these are all from the lower time frames, and you can see how that correlates so differently into every single time frame. So this is why I like trading the 1 minute and the 5 minute, because you get a full picture of exactly what's going on in the market at every given point, right? So I want to see, what did we have this week? And then we're integrating, let's see, highs and lows. So we'll have a high and low indicator on here. Right now I've just got it myself. I can't share it with you guys, but so you guys will have access. It'll show highs of the day, lows of the day, highs of the week, lows of the week, highs of the month, lows of the month. And so let's go back over here. What did we have? High of the day was, high of yesterday, 1808. About around here. So you can see what price did around this area. Rejected off, rejected off, rejected off, a little meltdown down, rejected off again. Now, there's a concept that it's the floors and ceilings are like glass. The more you hit it, the more likely it is that it's going to break, right? So it's come up and it's retested over and over and over again. Now, this isn't a reason, just because it's hit this several times to sell. You want to wait for your confirmations, but it's a good reference point of where the markets have been. I'm going to actually mark this up on a naked chart, not on this one. It's good reference to see where price has been and, you know, have your analysis on where you think it might be going. Because really, trading isn't rocket science, but you're basically saying, I'm a fortune teller and I'm going to know, I know where price is going. So that's why it's so important to have proper risk to reward and follow rules, because you're literally a fortune teller. The low of the day is 1788. Where are we? Oh, quite a bit lower. Is that right? Yeah, 1788. 17. Oh, all right. Let's go. So the high of the week is the same. High of the week and high of the month are the same, 1854. Let's see. The low of the month, 1780. And this will make you guys' trading a whole heck of a lot easier when this is all marked up on Zeus for you. That's about there. Oops. I got fat fingers or something. What's going on here? Sorry, guys. Weekly low is also 1780. Yeah, so the weekly high and the weekly low are the same as the monthly high and the monthly low. So these are key levels to look for, I would say, over the next couple of weeks here. Again, that's why I like trading gold. The respect structure, you can see what this did. Boom, boom. So knowing where the highs are, where the lows are. Granted, that's not always the case. Like, we broke through several highs over and over and over and over again. Zeus called the whole thing. Pretty cool. See, boom, break down, a little bit of support, break down again, a little support, break down again. And usually gold operates within like a 200 to 400 pip range. They're those crazy, I'm actually doing like 5-year back tests, and there's some pretty crazy like 800 pip runs. That's absolutely insane. So really important to have proper risk management, because if you just held sells or just hold buys, it's a dangerous game, right? So you can see structure, a little bit of structure, down. So it really, really respects these key levels. So great practice to implement is drawing up your own support and resistance lines. Yeah, so I would look for these key areas next week. I would honestly say that just looking at this, it's at this key level here, this high. If it breaks this and creates a little structure above here, like let's drop some fib here. There's a high to a low. It's almost hit that 50% retracement. So, you know, that next key level would be good 150 pips up. So what is that? That's 1824 and 1851. So I would look for those. If it creates structure, if it rejects off of where it is now, it's Friday, obviously there's not gonna be any momentum, and starts to break down a little bit, I would look for, you know, a nice 50 pip run to a, let me see, so what is that, 1780-ish down to 1783. So those are our key levels, right? So if you can combine, if you can go and mark up your own charts, figure out the daily highs, the daily lows, weekly highs, weekly lows, and then look through here and mark up fib. It really just, you know, if you're looking for a retracement, go from a high to a low. or a low to a high, depending if you're buying or selling, right? So really, really simple tools. And then you can take, I did that on the 15. I like doing it on the 15 because it's a higher time frame, but it's not so high that you're getting mixed up. Because if you look at the 4 hour, it's going to give you a whole different trading mechanism, which obviously you guys know I don't really mess around with that. And then you can come in here and go, okay, where are the arrows? Where is everything green? Where is everything red? And figure out, where's the best opportunity for me to sell? Where's the best opportunity for me to buy? What is Zeus telling me to do right now? And the big thing with Zeus is it's not going to catch every move. Actually, this run right here, with the new reversal logic, it would have caught it, which I'm very, very excited. We've got a new dev who came on, and he's going to be pretty much coding all of the time. So I have this big long list of Zeus 2.03, 2.03, and he's going to be coding nonstop, just as much as I'm developing. So yeah, really, really excited to have these pushes out. So use those key components, mark up your support and resistance, or even if, and reference it too, right? You got Zeus doing it for you. Go mark your own up and then see how it correlates. And see if you did it properly. You really can't do it wrong. Find floors and ceilings, and just places of what's the word I'm looking for? Not retracement. Why can't I find the word? Retest. Places where price has gone and retested. And so just figuring out structure, figuring out price action will really, really help you. And it's not something you have to do because we've mapped out the buy when it's green, sell when it's red. But it's great it's a great component to be able to compound that kind of information. Let me see. I think I went over risk management. Risk, 0.5%, 1/4% to 3%. More aggressive traders, 3%. There's really no rush. You can. I wonder if I have my compound calculator handy. Let's see. So if you put in $100 and you do, let's say, that's right. I don't know why it's messed up on here, but it's calculating it properly. A $100 account. The first week you only made $4, right? This is 4% a week. That's 16% a month. This is absolutely insane. And again, disclaimer, no income claims, but this is a potential if you were to compound this way. In a year, it's not crazy, but you turn that $100 into $800. Into 2 years, it's $6,000, 52, yeah. In 5 years, I think this is about 5 years. Let me just double check how many. I don't know off the top of my head how many weeks are in 5 years. 260. So just under 5 years, 1.5. So it's insane what you can do to just sit. What do you need to do to make 4% a week? That's 4 days a week, 1% a day. So even if you divide that in half and you start with a $1,000 account, you did 2% a week in a year is $3,000. In 2 years, it's $8,000. In almost 5 years, $130K. So just that fluctuation, you literally took 10 times the amount. Sorry, you multiplied your starting balance. Instead of $100, you got $1,000. You multiplied that by 10 and cut your profits in half weekly, right? So it's very, very. So imagine if you were losing that every week. So it's very, very, very important that you have proper risk management. You're not over leveraging, and this is for the long game, right? So you don't go to med school and become a doctor overnight. You don't go to law school and become a lawyer overnight. There's no job that you can be wrong 90% of the time and still be employed, right? If you have proper risk reward, if you have a 10-to-1 risk to reward, you could be wrong 9 times in a row and be right on that 10th one and still be a profitable trader. If you were a doctor and you killed 90% of your patients, you wouldn't be employed, right? So this is a really, really powerful tool, really powerful mechanism, really, really powerful product, and it'll work properly if you use it properly. So I just want to go over my list here. I think that's pretty much everything. Yeah, you really, this is going to sound super cliche, but you're really the only person that's holding yourself back from, being profitable or being successful with stuff like this, right? Over leveraging. You're not getting out when you're supposed to. You're not letting trades ride for as long as you can. Over leveraging. I don't know if I said that already, but it's that important. And just the difficulties of being a trader, right? Not proper risk to reward. Riding losses for way, way, way too long. They're all trials and tribulations of being a trader. So if you can they might not even be the Zeus rules, but if you can find a set of rules that work for you and just follow them, and work on the life stuff, integrate with the trading stuff, it's crazy what you can do with something like this. So I think that is pretty much it. Risk management, market structure, nice settings, weekly walkthrough, breakout areas. I'm gonna go into some Q&A. Other than that, I don't really have anything else to say. If you guys have any questions, feel free to pop on here, because I know there's only a couple of you guys on. So now is the time if you guys have questions. Oh, actually, I do have one thing I can show you. I know Chris is on here. As far as strategy tester, if you go into view and then go strategy tester, this drop down right here will give you a list of EAs that you have. And then I have tick data that I've paid for. Like I pay, and you can see the modeling data is like 99% accurate. Most brokers have like 20 to 40% accuracy. So the tick data, if you're actually entering on an EA, is not accurate. But just to run through charts on your AP server, I don't know if you have the charts. I don't know if it'll calculate the charts, but what you want to do is make sure visual mode's on, use data. This is the date. So try to go like a month ago, and then you can slowly watch. The Zeus OPM file is quite large, but you click start. And if you're having issues, if it's like making a squeaky noise, just go into journal and see what the errors were. And you can see price well, and then all you have to do is drag a template over top. As far as like issues and stuff, and you can see, okay, this, instead of trying to roll back over and over and over again, this is going all the way from 2020. I have the data. You might need to, this is a good troubleshoot. So it says period right here. Go to the daily and then start, and then let it download the data, and then go hour 4 and then start it, hour 1, then start it, and let it all run for a little bit, and then go to the 1 minute and see what the arrows did. So it's kind of, it's not complicated. It's kind of, there's a lot of moving pieces, and hoops to jump through. There you go. Another option would be no, you couldn't even do that. I have my own VPS, and I have my own MT4 terminal as well, right here, but you don't have Zeus on that. So the Auvoria, I don't think you can download data. You might be able to if you have, that would be something for support. You might be able to download data. I think I pay like, I don't even know, for Dukascopy, I think that's how you pronounce it. I've got like for gold, like since 2006 or something like that. And then you can download pretty much every piece of data that you need from any currency, indices, everything, oil, everything. But I don't even know what I pay. I think I paid maybe $300 for the year or something like that. So before you go and buy that, make sure just message AP and see if you can I don't think they allow like external data to be downloaded on their VPSs. I could be wrong. I know they don't for like executable files or from MQL5. So I imagine it might be the same for tick data. So yeah, if nobody has any questions, that's all I have to say. So we will we'll call it a day. And yeah, if you guys have any questions, we've got the Zeus chat in there. Either myself or Keenan or other members in there will help answer your questions. I try to stay plugged in there as much as I can, but I'm not always glued to my phone. Relatively speaking, I am, but yeah. So if you guys have any questions, anything about logic or parameters or anything, definitely plug into the AP Academy stuff, all Keenan's boot camps. Most of the questions should be answered in those platforms. If there's not, let us know, because then we need to fill in the blanks, and just make your guys' whole entire your guys' whole entire training process a lot easier, because if you guys are having the questions, I imagine other people are, and then we can go in and fill in the blanks and go from there. But sweet guys, thanks for popping on.
There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.